Good afternoon, everyone. Welcome to our Money Matters webinar workshop. My name is Catherine Sullivan DiCarlo. I am Vice President of Admissions and Marketing at Chapel Haven. I almost said Vice President of Autism. And I really want to thank our guest speaker today, the very knowledgeable Andrew Komarow, and I will introduce him in just a moment. But first, I wanted to tell you a little bit, and this is a photo on the screen here of our new campus. We just completed a beautiful campus upgrade, and you're seeing our courtyard and our residential buildings. And just a little bit about Chapel Haven. We have been doing what we do since 1972. We started out on Chapel Street in New Haven. And we serve about 250 adults. So our programs all serve adults 18 and up. And we are a lifelong program providing individualized services for a wide variety of individuals. And our goal is to help each person learn how to live with independence. So we have residential programming. We have Chapel Haven Online, which is our virtual program. And you can read more about all of that on our website, chapelhaven.org. We also do day programming, weekend recreation. We help people find jobs and gain employment, and we do a lot of other supports. So check us out. And we do have a couple of opportunities coming up. We've been doing virtual open houses right now since the pandemic. And we tend to do those on Saturday mornings because we find that that's when people are available. So our next open house will be Saturday, March 13th at 11 a.m. Eastern Standard Time. And we will be giving an overview, and you'll have the chance to meet student and parent ambassadors and get more into the details of our programming. That's 11 to 12:15. If you miss that, or you can't make it, or you're going to the Bahamas or something, lucky you. You can pick us back up on Saturday, April 10th. Again, that will be online. And my email is on the screen there if you want to find out more about that. Also want to mention that we were recently interviewed on the Connecticut Styles show for WTNH News Channel 8 about our Asperger syndrome program. And that interview ran last week. It's going to be repeated tomorrow, but you can view the whole segment on our website at chapelhaven.org, or you can go on to WTNH.com if you want to see that interview. Okay, so it now gives me tremendous pleasure to introduce our speaker. And Andrew Comerow is a passionate advocate for autism awareness in his community, and also in his work as a certified financial planner. And we found out as we were prepping for the session today that he actually has the word planner on his license plate. So you know that this is a guy who really knows his stuff. He has experience in all of these areas that he's going to present on. So he has had an ABLE account. He was an ambassador for the National Resource Center for ABLE. He's had his own experience with state entitlements and benefits, and he serves on Connecticut's Autism Waiver Committee. And he really has a passion for helping individuals gain employment and also for advising companies that employ those individuals. So we've had him present for us before. We are so grateful to have him back, and I'm going to turn it over to him in 1 second. We will ask everybody to stay muted during the presentation, but Andrew was telling us he really loves to hear your questions and have them come into the chat while he's presenting. So if you have a question, feel free to put it in the chat, and Marissa Witkowski-Eldred, who is my admissions associate, and I will keep track, and we will tell him what the questions are. So Andrew, take it away.
Well, thank you so much for having me.
Thank you.
Well, so this presentation is going to be learning how earnings and government benefits can work together. As I was kindly introduced, I have a little bit of experience from the letters after my name. You don't have to count, there's 57, I counted recently. So I want to go through, and I want to preface this with, this is a very complicated subject. I am explaining it with the knowledge to back it up, but I'm attempting to do it very simply and practically. So there are, of course, situations that might be different. And, you know, if an attorney was here, they would use their favorite words. It depends. But as a general rule, I think this helps solve a lot of the fears and a lot of the issues when we're talking about potentially working. And this is very specific to Connecticut as well, although a lot of it applies to other states. Medicaid, i.e. Husky, is state specific. So I call this, again, making a case for working. So many individuals with disability benefits would love to work, but they're afraid of losing benefits. And it's not an irrational fear. It's really complicated. I think the government makes it complicated on purpose to save money. People give up trying to apply. Or what if you don't need the benefits now, but what if you need them again in the future, right? And you work so hard to be able to get them. And last I checked, in Connecticut alone, there's 32 different types of benefits with 32 different sets of eligibility criteria. So that's a lot. So when somebody says, well, I'm concerned about losing benefits, it's, well, what benefit are we talking about? How can we maximize things and understand the pros and the cons? Sometimes it's a myth. Sometimes it's a reality. Sometimes there's things we can do as individuals, such as able accounts. And sometimes, you know, some harder decisions have to be made. But we want to be able to maximize opportunity. So we have Jimmy, and I don't know why I came up with the name Jimmy, but we decided to go through this presentation with somebody, Jimmy. And Jimmy is currently disabled and receives benefits related to that. And again, I'm using the term, you know, benefits generically, how a lot of people do. I break down some different examples going through. So Jimmy, it was unemployed, but because of the amazing Chapel Haven, he now has a job at a local coffee shop. And he wants to know how the new job might impact his benefits. So I break them down into 3 categories. We're going to spend most of the time on the first 2, income and insurance. The others, the EBT, which are food stamps and Section 8, are a little bit separate, but we're going to solve for, I'll call it the most 2 common and arguably probably the most important. And before we get further, when I'm talking about Social Security or Ssdi, I'm also talking about what's called the Disabled Adult Child Benefit. Doesn't the government have such great names for how they refer to things? And the way to know if you or the individual has Ssdi or the Disabled Adult Child Benefit is you would have a Medicare card after 2 years of having it, in addition to, or potentially as an alternative to, Medicaid. So if you have Medicare, then you're on Ssdi or the DAC. It's not always that simple, but again, trying to break it down as much as possible for this presentation, because I find the biggest thing is it's so complicated, don't even know what questions to ask. So again, SSI, and then Ssdi, I'm also referring to what's called the Disabled Adult Child Benefit, just going through. So there's 2 types of Social Security. There's Ssdi, Social Security Disability Income. This is in a benefit that you are entitled to. It's an entitlement. I know sometimes in the media that word's negatively, but here it's positive. It's because you or a family member, the individual or a parent, paid into the Social Security system, and they are getting a benefit off that resource, almost like disability insurance, right? That's why it's called Social Security Disability Insurance. Supplemental security income known as SSI. That is an amount, regardless of whether you paid into the system or not. Most individuals qualify when they turn 18 because prior to 18, the parent's income and resources are counted. So those are, the two benefits available. Now, almost every individual on SSI will qualify for traditional Social Security in the near future, because when their parent either becomes disabled or retires or passes away, they will be eligible for a benefit based upon that parent's work record. So I like to say that, yes, SSI is important. Yes, you should get it. It's the gateway to some other things. Many individuals, by the time they're, 30s, 40s, the parents do eventually want to retire, right? Or at least start drawing on Social Security in retirement. If they're disabled, they get the benefit, and the individual will also get more of a benefit when the parents pass away. So, and that is usually, but not always, greater than the SSI income amount. So I just want to keep that in the back of everyone's mind. I apologize if I already lost you.
So Andrew?
Yes.
We already did have a question from
Perfect.
Charles. Just asking, how is SSI different from SSDI? So I know you kind of just went through that.
Yeah. And that's, look at the slide we're on right now. So,
okay.
So SSI, everyone can get. SSDI is more like traditional Social Security. So the child is receiving that because the parent paid in, or the individual is receiving it because they paid in, if that makes sense. In the way I like to equate it is, SSDI, you become eligible for Medicare. So I think traditional Social Security, Medicare. So is there another question, or I think I saw something blank?
Just a question if we could get a copy of these slides, and I'm sure you'd be happy to share them, right, Andrew?
I'm always happy. It's public information, but even better, we're going to host a video on YouTube. And if you want a specific image or two or something on them, absolutely. So some of it is me talking, and you can't get the full of that with just the slide, but absolutely no problem sending it. So these both have different rules when we're working. I chose, for the sake of this, to focus on the three, let's call it main benefits: Medicare, Medicaid, and SSDI, given that, for one, SSI is almost too complicated to go into for an hour long. It also is the one that you're not going to be eligible for forever, right? Because you're eventually going to get that increase almost certainly to the what's called disabled adult child benefit, which will overrule SSI in the majority of cases anyway, but happy to get into that otherwise. So individuals receiving SSDI, disabled adult child benefit, after 2 years are eligible for Medicare. Now, if you're reading this slide, if you have one slide, I want you to look at what I put in all caps at the bottom here. It says, you will never lose your Medicare, ever, ever. So if somebody becomes, even if they're getting a $100 Social Security disability income payment, because they worked a little bit prior to they were 22 on their own work record, that happened to me. I was on SSI. I was working at CompUSA. And suddenly they decided to give me SSDI and Medicare. So when I was 21, 22. So I also know that personally. No matter how much money you make, you will have Medicare for 8.5 years without paying for Medicare Part A. 8.5 years, no matter how much money you have in the bank, no matter how much money you make. The only exception is, after 8.5 years, you will have to pay a little bit for Medicare if you're not disabled. So, but you'll never lose it ever. Any questions on that?
I unregistered.
Unregistered?
Or type in the chat. So again, just on this, there's different types of benefits. Well, and I'm just mentioning this while somebody might be going over a question. I want to start with this because health insurance is really important. Medicare, right? So an individual be eligible for Medicare. The only way they would drop the Medicare is if after 8.5 years, they did not pay the Part A premium. I am currently not on Medicare. I did not pay the Part A premium. I pay an ungodly amount for insurance outside of that instead. Don't ask me why, but I do. So I don't have that anymore. Mine was canceled. That is because I chose not to do that. I had it free for 8.5 years. Part A, I didn't use it once. Was it, I don't know if somebody had a question before I move on.
There is a question, how much does Medicare cost?
Well, that's a tricky question. The Medicare Part A is free for the first 8.5 years. After that, you know, a lot cheaper than traditional health insurance. There's also what's called Part A is hospital, Part B is traditional doctor's visit, Part C is prescriptions. If an individual meets other certain criteria, such as being on Medicare and Medicaid, then there is a program where the Medicare supplement will be covered by the state as well. So in the situations we're talking about where there's someone with a disability, it's almost certainly free, but that doesn't mean it is always. There's subsidies for it.
So there is another question. You become eligible after 2 years, comma, do you need to apply to receive Medicare?
So absolutely, under 65, you need to become eligible for Ssdi or the DAC. And then you're eligible for Medicare automatically. I wanted to highlight this slide because it's an easy one. You can have $10 million in the bank, you could make $1 million a year, and you may lose your Social Security disability, you will still have your Medicare. So I wanted to move on. I didn't put a lot of other bullet points under this, but when it comes to Social Security disability, so I look at it, remember there's a few different buckets. There's income, Social Security, then there's insurance, which is Medicare and Medicaid. This is an oversimplification, but it's also not wrong. If you're receiving Ssdi or DAC and you make under $13.10 a month in 2021, there will be zero reduction in your benefits. So if you make $900, you would keep the $900 plus the $13.10. Above that amount, so SGA stands for substantially gainful activity. What the government says is if you can make more than $13.10 a month, you are not considered disabled anymore. So if you make over $13.10 a month for too long, you are not considered disabled in the eyes of Social Security.
Is there any way to quantify that $13.10 a month? Is that you work 10 hours a week or something, or does it vary?
The government is literally that simple, where it is per month how much you work. Technically a little different if you're self-employed, but it is how much you make per month. So that's also something to be very careful of if you don't, get paid the same amount per month with an employer. Now, there are ways that this can be adjusted. So for example, if you have extra expenses getting to work because of a disability, you can deduct that from the purposes of Social Security against the $13.10 a month. However, putting money into an ABLE account or a 401k does not reduce the $13.10 a month because it is, again, what's considered gross income. It's the income that you get in your pocket minus some exceptions. There are some ways around this that I do work with employers on, but generally speaking, when it comes to the employee, they don't have the ability to customize, right, their benefits. The employer's paying them or they're not. So there are a few things that can potentially be done. I find this is hardest when the individual is very close. If we're going to make $40,000 a year, well, that might be okay. We don't want to lose $1,300 a month for making $1,400 a month. That's where we want to be a little cautious and a little careful. Now, there is a period of work where you are allowed to make as much as you want and still keep the benefit, called the trial work period. You only get that once. And because the government wants to make it really complicated, that number triggers a little lower. So if you haven't done the trial work period yet, although you wouldn't lose your benefits, might recommend you keep an eye on that number as well. Long story short, I wanted to say, if you make under $1,300 a month on traditional Social Security, you don't have reduction of a penny. So Jimmy is on Social Security, DAC, since his father retired. He's receiving Medicaid and Medicare. If Jimmy makes $1,300 a month, there is zero reduction in his benefits. If Jimmy makes over $1,300 a month, he may lose his benefit, but then is likely making more in a job than he was from the Social Security payments. And we already established that he keeps Medicare. Now, one of the questions that we get asked most about, and probably the thing I'm most excited to talk about today, is Ssdi, especially Connecticut's program on working with a disability. Now, before I learned about this program, I thought Connecticut was the worst state in the country for really just about everything when it came to benefits and taxes. But we actually have an amazing program for individuals with disabilities to work and save. It's one of the best, if not the best in the country. So as much as Connecticut might have some high taxes, as much as we might not have funding as much as we'd like for some things like the autism waiver, we have an amazing program for if you want to work and save with a disability and keep your Medicaid in Connecticut. I'm going to be referring to a version of Ssdi, which is Medicaid for disability. I gave a short summary of the others up there as well. If you are unsure of which one you have, I suggest looking at a DSS statement. It will usually tell you. So Jimmy, who, if we go back to Jimmy, has been eligible for Ssdi because he has a disability. When Jimmy gets the new job at the coffee shop, he is eligible for something called MedConnect. This is Connecticut's working disabled program. It's also called SO5 if you see that anywhere on the paperwork. So this is the same exact insurance, but they give more, you're able to save more because you're working. The government says, well, we want you to work because, well, then you're paying more into taxes, so we're going to let you save more. So instead of that, if anyone knows the $1,600 to their name, that's where this number goes way up. Before I go to the next slide, if anyone wants to type in the chat, how much money do you think Jimmy can make per year and keep his Medicaid on MedConnect? Type a guess or two and I'll move on.
Are you seeing the guesses?
Yep, I'm seeing the guesses. So Sally Huck must know, or very good guess. Either way, 75,000 per year can keep the Medicaid. So you can make up to 75,000 a year in Connecticut's working disabled program, have free Medicaid service. That includes qualifying for if you're on any DDS benefits, if you're on Connecticut's autism waiver with DSS, paying for services, you still qualify for all of that. And you can make up to $75,000 a year. Some other guesses were 45, 60, and 35. 75,000 a year. You can have 10,000 in your name instead of 1,600. But wait, there's more. You can have an unlimited amount of money in a retirement account, or enable, but enable, you always have the ability to have money in. Unlimited. So if you have 2 million, if you put in $2 million in a 401k while on MedConnect, first off, good for you. Thank you. Secondly, even if you go off MedConnect, you can't work anymore. You go back to traditional Husky. That money in that retirement account is exempt forever. So even if you go back to being able to only have 1,600 in your name, that 2 million is excluded forever.
Okay, you do have some questions, Andrew.
Okay.
So there's one from Teresa. She says, somehow my disability got filed, so I cannot work at all. I am now paid under railroad since my husband works there. Is there a way I can earn a little? When I call, they tell me no.
Email me. Railroad's complicated. Should be like traditional Social Security, but that's, I don't run into that.
Why don't you give us your email?
Oh, Andrew at
Yeah.
planningacrossthespectrum.com.
Okay. I'm just putting it in the chat. And then
I would say ask me a tougher question, but that's probably one of the,
I thought that was pretty tough.
That's a really good one. I don't run into that one that much, and I can say that one, it depends. But the answer is you should be able, something. And like we spoke about before, if you're eligible for Medicare, you can work and not lose the Medicare, right? If you qualify for the Medicaid, work at MedConnect, you work and not lose that. It would be the railroad retirement benefit. But I'll look into that.
And then a question of, if I am paying for dental and or vision benefits through my employer, does that still count as part of what I am earning per month?
Generally speaking, the answer is yes. Yes, if it's your gross pay. Now, if the employer offered it in a unique way or two that I really don't see employers do much of, potentially not. But with 90+% certainty, the answer is that does not help lower from 1310. Good question. Glad I could answer that one. Do we have any more?
The questions are now rolling in, Andrew. I hope you're okay with that.
Yeah, I'm good with that. I'll go through a little bit, but keep throwing them at me.
Okay, under MediConnect, is the 100K max in an ABLE account affected?
Great question. Who asked that question?
That was Marla.
Okay. Well, what I can say about that is that the SSI is the 100,000 limit. Medicaid has no limit. So what happens is if somebody is on SSI, the $793 a month haven't memorized the version yet this year still, that would be suspended. If they're on SSDI, Medicare, and MedConnect, they could have 300,000 in an ABLE account and would see no reduction in benefits.
Okay. How about a comment from Catherine who says doctors don't like to take Medicaid?
That's true. A lot of doctors don't, but the good news is a lot of doctors like to take Medicare. So I would say that is a great reason why an individual should start working, because even if the individual is receiving SSI and they start working at 18, 19, they earn some credits under their own work record. By the time they're 21, they may only be getting $100 of SSDI, but they'll start qualifying for Medicare in addition to Medicaid. Or again, when the parent retires, becomes disabled, then they'll be eligible after that for Medicare as well. And Medicaid is also the gateway for services such as funding from DDS and DSS for things like the autism waiver. So there is a lot more coverage and things that can come with being eligible for Medicaid than simply a lot of doctors don't take it as well.
So just out of my curiosity, if you're on SSI, right, and let's say your parent retires or something changes, you have to contact Social Security and get moved over to SSDI?
Actually, and no, and you
Okay.
can't even stop them from doing it. So I've ran into issues where the individual was on a certain program that was more income dependent and they weren't working. And when the parent retired or passed away, they were getting too much money from Social Security to qualify for their benefits anymore. If the individual was working, they would have been able to qualify for those benefits still under MedConnect, potentially. But they have to get a little creative, but that can be a challenge sometime. So no, you don't need to do anything. I mean, if you're not getting the benefit, you should call, but it pretty much happens automatically from the majority of the time I've seen. And again, we're trying to, if you can't tell along the way, I'm giving examples, but I'm trying to give all the reasons that you should consider working. You're eligible to qualify for Medicare even sooner. You're eligible to, get this great thing called MedConnect. You're able to also have fun, do something, have a job. There's other benefits. There are potentially health insurance. There is a 401k. There can be stock options, life insurance. There can be other benefits as well, just emotionally, just working, right? It's good to have something to do. I'm not trying to rub it in anyone's face with COVID right now, but in general, it's good to want to do something to get out of the house. There can be lots of perks to working beyond just the paycheck. I would argue those are almost even more important than the paycheck itself. So, and I'm going to go over this slide before I'll talk about ABLEs for a little bit. And I have this as a higher resolution PDF. It's also on my website. This is an example of Jimmy. Lives with his parents. They're both in their 60s. He receives $800 a month. And this is him getting offered a job, be a barista at a coffee shop, $15 an hour, 20 hours a week. All these benefits are pulled right from Starbucks. So these aren't things that I just made up that sound nice to have. These are, if you work for Starbucks, everything I'm saying is true. Well, according to them. You would be eligible for, again, their disability insurance, their 401k match, their stock plan, their life insurance, their dental, their vision, their health insurance, their Medicare, their Medicaid. In addition to being able to put more money in an ABLE account, if you're working, you can put away even more. So there's a lot of benefits here when you think about all of this versus just the Social Security. And in this example, and again, everyone's different, we're not losing anything. We're able to keep everything we have, and we're able to work. Again, assuming we can, assuming we want to. So I have a few slides on ABLE accounts. If anyone wants to stop me before go a little more on ABLE accounts, I'm transitioning a little bit. Yeah.
I think there is another question, which
Sure.
from Merci. What is the income limit? What is the income limit to have Medicare and Medicaid?
So Medicare, there is no limit. Medicaid, if you're working disabled, MediConnect, $75,000 a year.
Okay.
In Connecticut, if you're on Medicaid or Medicare, you can make up to $75,000 a year and you will keep your benefits.
Okay. Brian says you don't lose Medicaid if you work at Starbucks.
No, not at all. You could work at, $75,000 a year is a pretty good income even in Connecticut. You can make $74,000 a year. I think that's probably more than the manager at Starbucks makes, or pretty close. And you will keep your Medicaid. And if you made $750,000 a year, you would keep your Medicare.
Boy, learning something new every day, huh? Melanie says her daughter is 19 and gets SSI for $529. How do you get Social Security instead? That seems much higher. I'm not sure if I understand that question. Do you get that?
I do. First
Okay.
off, Melanie, right?
Mhm.
So your daughter's not paying rent, which means Social Security is reducing her rent payment by 1/3. You should have your daughter pay you rent, and you should put the money in an ABLE account. Then you'll get closer to $800 a month from SSI. And again, you can just then put the money back to her in an ABLE account. You can contact me afterwards for how to do that. That's a no-brainer. The other two ways to eventually get Social Security, the traditional Social Security, is if your daughter works and or when the parents retire, become disabled, or pass away, there will likely be that increase to more the traditional Social Security. And we're wishing no ill upon you, Melanie.
Back to Brian, who still wants you to know that it is not true in many other states that you can keep your Medicaid while earning, approximately $75K per year.
So yes and no. I did highlight that I think Connecticut is one of the best states in the country for this. I also want to remind everyone that Medicare is every state and Medicare is unlimited. And as I mentioned, someone mentioned previously, Medicaid doesn't take quite as many doctors. With that being said, the majority, if not most of the states, do have a similar program to Connecticut, where you can still purchase Medicaid, where they do offer some sort of working disabled program. So every state is different. But most states, a lot of states do offer something similar. Again, I wanted to focus this one a little more specifically on one of the unique benefits Connecticut has, but many states do have Medicaid buy-in programs. And if you're making $75,000 a year and you have free Medicare, you're probably in pretty good shape anyway. Especially if you live in a state that costs half as much as Connecticut, then you're ahead.
And then Marla wants to know, why is the 1310 max under SSDI lower than the max you can earn if getting SSI?
I'll email Marla that later. Little more, slightly more complicated to answer. So, okay, I'm just replying back with my email address, and that'll be on the slide as well if anyone wants to make an appointment or ask me any other questions. So on ABLE accounts, I usually get a lot of questions on ABLE accounts. An ABLE account does not solve reducing income. An ABLE account does not reduce your income for qualifying for any benefits. An ABLE account does help save if you're on Medicaid or SSI with that $1,600 a year in Connecticut, or $2,000 for SSI and most other states. So, for example, an individual can have $50,000 in an ABLE account and still qualify for Medicaid, even if the asset limit, they are only allowed to have $1,600 in their name. An ABLE account can be used for almost anything. I say this as an ABLE ambassador, as someone who speaks around the country on ABLE accounts. I find something that a lot of people get very concerned about is, what is a qualified disability expense? This is very liberal. They want individuals to be able to save. And if you can rationalize in your head, to yourself, how this, is helpful for the person with a disability, then it qualifies. With certain types of trusts and things like that, there can be some more stringent criteria. That is not the case. So can it be used to buy a house, a car? Yes. Whatever you're thinking, I'm almost certainly the answer is yes. If somebody wants to try and come up with something really weird and try to see if I'll say no, they can. Some people like just to have fun, but if you want to type that in the chat, for the most part, almost anything that you can, again, say is, part, the expenses because someone might have a disability, it's disability related, you can qualify. A computer can qualify, a car can qualify, a vacation can qualify. A good example of not qualifying is the church was a representative payee for an individual with an ABLE account, and they wanted to use the money to build a gazebo. Well, that wasn't for the individual. Similarly, a gift to a friend is not for the individual, so that doesn't qualify. Again, anything that you can rationalize that, is for that person. Buying gas, buying food, electronics, computers, even vacations, there can be, can a vacation be good for your mental health? I wouldn't know. I haven't been anywhere in a year, neither has anyone else, but I would like to think so. So, vacation. So, I really encourage people to, be a little generous with the definition of what's a qualified disability expense. Who is eligible? It's somebody who had a disability before they turned 26. That doesn't mean that they knew about the disability before 26. That doesn't mean that they need to be on disability insurance prior to 26. If an individual finds out they have autism at 30 and they previously have not been on any benefits, they would be eligible for an ABLE account because they were born with autism. They always had autism. They did not get autism from the COVID-19 vaccine. So therefore, they would be eligible to open an ABLE account. I recommend, working with someone to see if an ABLE account makes sense. I find that generally speaking, it is never a bad idea to save money on a tax advantage basis. So another advantage to working is you are able to put more money in an ABLE account, roughly about 26,000, maybe a little more. Normally it's 15,000 per year. I'm almost done, and then we could go over some of the last questions, and I'll have my information up on the slide. I just have a couple more left. How do you open an ABLE account? What do you need to do? So Social Security number, basic information, proof of diagnosis or disability. That can just be a letter from a physician, or if the individual is on SSI or SSDI. Not very hard. It's not like trying to prove you're disabled to Social Security. And then to open an ABLE account, Connecticut has an ABLE account. I presented with them in Chapel Haven. I think that's recorded on Chapel Haven as well with the state treasurer's office of Connecticut. You should check that out with Chapel Haven. But there are also other states that have other pros and cons. There's Ohio, there's Massachusetts. So, but at the end of the day, they're all fairly similar. There's some minor pros and cons. And it's a decision that's up for you. I find it's really important, the ease of use, you know, the ease of a debit card, the ease of, you know, customer service. It's not as much about, you know, the interest rate or the investment options. There's a lot more than goes into an ABLE account than that. So.
Wow, a lot of good info there. And I know we've had a number of parents who, when their kids were still living home with them, they were having them pay rent for that very reason that you mentioned before. So do you want to see these questions, or you want us to ask you?
Yeah, so let me pull a few up.
Yeah.
And if I don't get to any, if you want to either email Chapel Haven or email me.
Mm-hmm.
So if Jimmy moves to another state, how does that work? It depends what state he moves to. So Medicare and Social Security are the same anywhere. The Medicaid, the MedConnect would be different. You know, we as a company, you know, we do comparisons for other states, what may be better or worse. It's hard to know. But so it all depends.
Is that a question having to do with ABLE or
no? I think that
Okay.
I think that was Medicaid. If it's ABLE,
Medicaid.
then the answer is really simple. Then it doesn't matter.
It doesn't matter.
Essentially,
Okay.
essentially, yes.
Mm-hmm.
So some states offer a tiny tax deduction for using their states. Connecticut doesn't.
Mm-hmm.
Recreational movies like mini golf, you know, weekly food, clothing. How can I streamline so my adult child has an easy way to pay for things himself? Melanie, you hit the nail on the head of exactly why you want an ABLE account. The individual can use the ABLE account for all of those great things. As far as I see it, food, clothing, general needs, absolutely. Again, you know, if you could argue mini golf, exercise, movies, good for mental health. I've never seen this questioned ever. So I would say, again, absolutely. So, and I'm skipping over one or two just to come back to the slightly harder ones. Where do you go to open an ABLE account? Then it is, my site, I have a comparison. There's fidelity.com/ABLE. There's ct.savewithable.com for Connecticut's. And then there's stableaccount.com for Ohio. So, or a quick Google search of Connecticut ABLE account. But those are the top three I would recommend for different circumstances. So then there is I am on SSDI and Medicaid, and they're going to switch me to Medicare on May 1st. So to apply for Medicaid after having Medicare, the website says my income can't be more than $600. Is that correct? Well, if the individual is working, then they will be eligible to, maybe that's not the Medicaid they're on now. There's several different types of Medicaid in Connecticut and other states as well. So $600, that income doesn't seem right. Every situation's unique. Everyone's different. If Mercy was on MedConnect, then it would be $75,000 a year. So, and then we have a few more. So Brian, I don't think there's different, you have to understand too, that there's the Medicaid limit, and then there's working disabled programs that allow an individual who's an adult to receive Medicaid. Have to understand that there are lots of different types of Medicaid. So, and there's also what's called Medicaid buy-in programs. Also, Medicare has no limits once you have it. So I have some comparisons and information on each state. Again, getting a little individualized. Positive and negative of plan in Connecticut. That's a longer question than I have for. I think the positive is they will take anyone. The negative is they will take anyone. And I think that's the long and short of it. I usually consider them a last resort, especially now that ABLE accounts exist for lower amounts for people who are not funding a trust. But that's a little bit more than I might have time for next couple minutes. What else? Will I be going over the disabled adult child benefit? I thought I did, or well enough. So, and when I was referring to SSDI or traditional Social Security, I did say that that would encompass the disabled adult child benefit, as once you're receiving them, they're essentially the same. So, and how much to charge?
We should just note that everybody who registered will receive the recording. So if you did miss some parts of this, you'll be able to review it.
Melanie, I can't answer that. Not because I don't want to, it's just because I can't. You're supposed to charge what's called a fair market value rent. And if I could read your lawyer's mind, I would have been able to read my wife's mind, and I would have had a much better Valentine's Day yesterday. So I don't know why your lawyer did it either. And I don't think there's any more questions. We have a couple minutes left if anybody has any questions. Again, my information's on the screen. Andrew, planetcrossspectrum.com. Go to our site, planetcrossspectrum.com. You'll get a copy of the PowerPoint presentation. You will get an email. This will be on YouTube, so you can watch it Friday night with some popcorn. So Charles had a good question. If my parents die before I turn 60, how could that affect my benefits? So when, let's say your parents retired, you would be getting 50% of their benefit. When they pass away, you would get 75% of their benefit. In other words, if you're getting $2,000 a month, if you're getting $1,000 a month now, you would get $1,500 a month. I still think your parents are worth more than $500 a month. I don't know them personally, but I would go with that.
Andrew, do you have one last piece of advice to the audience? Some common mistake people make, or they don't think about something, or?
The biggest thing I would say is that if you're a little confused and what I've told you is different than what you've heard, that's a good thing, because the fact is that I find the vast majority of people can work and make more than they think they can. Yes, every situation is complicated. Yes, every situation has different, factors regarding it. And I did try to oversimplify things a little bit by going over a simpler situation. But when it comes down to it, generally speaking, if you look at Medicare and Medicaid, if you're working, you're not going to lose those. So I want everyone to keep that in mind. If you're working, you're not going to lose Medicare or Medicaid, and you can save. If you're making $70,000 a year, that's okay to lose $800 a month. I think so. And if you can't work anymore, you can go back on disability. So I definitely, it's something to keep in mind, something to do carefully, but very important to know why you're doing it, what you're doing. And yes, I can charge by the hour.
Okay. All right. Are there any other last minute questions? And if not, I just want to take a minute to thank Andrew, because you have presented for us. I think this is your second or third time. We've also done a driver's ed presentation with Andrew Arbo, who works for the Andrews. And so we really so appreciate all your time and your sharing of your expertise.
Thank you.
And we will we'll be back in touch with the recording. And thank you all so very much for joining us.